Elisabeth Thaller is a member of the International ISO Committee PC 302 that revised ISO 19011 Guidelines for Auditing Management Systems. She's also a member of the Spanish Translation Task Force under ISO Casco for ISO 19011-2018, and she's participated in ISO technical committees in relation to ISO 9001, ISO 14001, and ISO 17021. Elisabeth has gained her practical and hands-on experience with management systems and standards throughout her more than 25 years of work as a consultant, trainer, auditor, and assessor, as well as in management positions in multicultural environments, mostly in the US, Latin America, and Europe. Elisabeth, take it away.
Thank you very much. Thank you. I'm pleased to be here with you once again. I was fortunate enough to participate in the International ISO Committee that reviewed the ISO 19011 standard guidelines for auditing management systems. And I'm pleased to share what I've learned there or what we discussed there with you today in my presentation. I will talk about the changes, or rather what's new to the 19011 standard and how it will affect you. We had a total of 3 international meetings in which we discussed the comments that have been proposed by each participating country's mirror committees. And with a large number of representatives of different countries and regions, you can imagine that there were some interesting discussions going on. At last, in November last year, 2017, we all agreed on the final text. And the final draft international standard, FDIS, has been issued. It is currently out for vote. I have put this presentation together based on the text of the FDIS. That is to say that this is not the final approved version of the standard yet. However, we do not expect any significant changes going forward. We'll talk a little bit about the history of ISO 19011, what has changed and how does it affect you, the user, how it will help you in enhancing the value of audits, and which will be the next steps for the user. First, let's review the history of ISO 19011. For those of you that are old enough, you might remember that the first guidelines for auditing quality systems came out under the name of ISO 10011, Part 1, 1999, and 10011, Part 2, 1991. These guideline documents came out after the first management system standard was published, which was quality systems, ISO 9001, which most of you are familiar with. The first version of that standard was published in 1987, and there was a need to provide some guidance for auditing quality systems. So part 1 was issued in 1990, providing the procedures for auditing, and part 2 was issued in 1991, providing the qualification criteria for quality systems auditors. The next management system standard to be published by ISO was ISO 14001, Environmental Management Systems. It was issued in 1996, and at the same time, the same technical committee, ISO TC 207, also came up with a guidance document for auditing environmental management systems, and that standard was called ISO 14011 1996. Well, these two committees, ISO TC 176 for quality and ISO TC 207 for environmental management systems, then realized that the procedures for auditing are pretty much the same, no matter what kind of management system you have in front of you. So they joined together and revised the guidelines for auditing and came up with ISO 19011-2002. So that was actually the first time, or that was when the standard was born. The name was Guidelines for Quality and/or Environmental Management Systems Auditing. Now, after 2002, things changed. More management system standards came out, and there was a need to broaden the scope of this guidance document. ISO 19011 was revised, and the next version, which is the current version now, came out in 2011 under the name ISO 19011 2011 Guidelines for Auditing Management Systems, which is applicable to any type of management system, any type of organization. In 2016, the revision of this document initiated, and hopefully by the middle of this year, in April, May, June, I don't really know the exact timeline, we will see the final published version of ISO 19011 2018. Now, why did this standard or this document need to be changed? And I want to clarify here, ISO 19011 is not a management system standard, as you all know. It's a guidance document. It doesn't establish requirements, it provides guidance. And this is an important distinction. As you know, all new management system standards, or those that are being revised, follow now the ISO Directives 1 higher level structure. And so they all follow the same structure, and they use the same terminology. ISO 19011 does not have to do that. So don't be surprised if you don't see the same structure. It wouldn't make any sense. And if you see slightly different terminology. Now, why the change? Business needs have changed, and standards, or in this case, the guidance document, needs to remain relevant to the demands of the users. The intent of the revision was to improve on the existing document and not to be a full redesign. The purpose of audits is to provide information that helps the organization in several ways, and some of which are listed here. Traditionally, management system audits were performed to verify conformity to standard criteria. And with the evolution of management system standards and the introduction of the process approach, which was a while ago, as we can all agree, the focus has shifted to verifying that the management system meets its intended outcome with focus on performance and effectiveness. The revised ISO 19011 document also addresses the context of the organization, the needs and expectations of interested parties, and risks and opportunities, which are standard requirements in management system standards that follow the high-level structure, as mentioned before. The purpose of ISO 19011 is to provide internationally recognized guidelines as well, meaning no matter where an organization is located or where the audit team is located, the auditing practices outlined in this document are globally recognized. And they should provide sufficient and appropriate guidance for audits to be consistent, reliable, efficient, effective, and they should also be value-adding. Another important aspect to achieve the above is to ensure that persons involved in audits are competent. This includes not only the leader and the other members of the audit team, but also the person responsible for managing the audit program. This part of competence has always been part of ISO 19011. However, there have been changes as the business needs evolve. Now, additional consideration for the review of ISO 19011 included an increased integration of multiple management system standards. Many organizations, as you know, choose to have a management system that conforms to several standards. For example, a combination of quality, environmental, and information security management system, or any combination possible. The global business environment has significantly changed during the last decade or two, and much information is stored electronically, and the definition of location is not always clear. Some organizations may only exist virtually, which poses quite a new challenge. And when we discussed this topic, which we discussed extensively, one of the colleagues in our committee came up with a sentence that explained it very clearly. He just said simply, an audit is an audit. That means that no matter where the organization is located or how the information is stored or accessible, the audit process remains the same. What changes are the methods and the technology used to achieve the audit goals. So please remember, an audit is an audit. The complexity of the organization is another consideration. Organizations can be as simple as a one-man out-of-the-garage operation, or as complex as a large organization with multiple sites. ISO 19011 must provide guidance which is generic enough to address all types of management systems and businesses, and at the same time provide sufficient guidance to be useful. And finally, there was a need to include risk within the guidance document. That is not just risk related to the audit itself, which in the current version of ISO 19011, as you might remember, risk is addressed, but rather in the context of not reaching the audit objectives. Risks involved in not reaching the audit objectives, or risks posed on the auditee because of the audit team's presence. In this case, in this new standard, there was a need to include guidance on how to audit risk or risk-based thinking, which is also a requirement in the high-level structure. This leads me to the following slide. We're going to start talking about what is new in the ISO 19011 2018 version. And I'm gonna give you a list, or I'm gonna give you several examples of changes or additions to the document. Please don't look at it as an inclusive list. It's rather a summary of what you will see. So you'll still have to read the document, if you will. One of the most important additions to the document, as by my personal opinion, was the addition of an audit principle. Risk-based approach. Let me read it to you. The risk-based approach, an audit approach that considers risks and opportunities. The risk-based approach should substantively influence the planning, conducting, and reporting of audits in order to ensure that audits are focused on matters that are significant for the audit client and for achieving the audit program objectives. Now, let me have you read this by yourself and have it sink in. These two items that are in red and underlined are very important because they change how we do our audits. It's not a dull process where you can just do it the same way every time you do an audit in the same organization, which you shouldn't do anyway, but a lot of people do it that way. But here now the focus has changed. Ensure that audits are focused on matters that are significant for the audit client. The audit client, who is the audit client? The audit client is the person or organization that requests the audit. So they are important because they tell us what they want from us when we go and audit an organization's management system, and also matters that are significant for achieving the audit program and objectives, which also are usually established by the audit client. But remember now, please, that sometimes the auditee may also be the audit client. But in many instances, for example, when an organization audits its suppliers, the audit client is not the same as the auditee. This new principle of risk-based approach has been interwoven into the structure of the rest of the document, starting with Section 5, Managing the Audit Program. It is also included in Section 6, Conducting an Audit, and in Section 7, Competence and Evaluation of Auditors. And of course, there is some important guidance included in the annexes. Now, Section 5, let's talk about this. Managing an audit program. When establishing an audit program, consideration should be given to several factors, including the nature of the organization, its size, its context, its processes, types of processes, the complexity of processes are outsourced or being done in-house, the risk inherent in the type of business or based on the complexity of the organization, and the maturity of the management system. There is a difference between a one-man operation, one person sitting at a desk and, for example, buying and selling goods online, as opposed to an organization that has multiple sites, hundreds of thousands of employees, that manages a high number of complex and non-complex processes that are all interrelated, that maybe outsources processes to other organizations, and that works in an environment of high risk, for example, a hospital, and or that is in an environment that is highly regulated. Now, another aspect to consider is the maturity of a management system. Organizations tend to over-document when they establish the management system, when they're new to this. And over time, they figure out what is useful and what is not. So all this needs to be considered when preparing or establishing an audit program. Based on the requirements of the high-level structure of the ISO directives, management systems should be designed considering the context of the organization, including relevant external and internal issues, needs and expectations of relevant interested parties, the organization's strategic and organizational objectives, and related risks. ISO 19011 says, audit program objectives should be consistent with the audit client's strategic direction and support management system policy and objectives. Now, all these factors are also an input for allocating the resources. Isn't it more than obvious that you would allocate more resources to areas of greater risks or to lower level of performance? And that's exactly what the guidance in Section 5 suggests. Audit priority should be given to allocating resources and methods to matters in a management system with higher inherent risks and lower level of performance. Now, the functionality of the management system can also be more complex when important functions are outsourced and managed under the leadership of organizations. The question of who is actually management, who provides leadership, that can be a big issue in a complex organizational environment. And it can cause some headaches for the person planning the audit program and also for the audit team leader when he or she goes into or prepares for an individual audit. So in this matter, particular attention is to be paid to where the most important decisions are made and to what constitutes the top management of the management system. I'm sure many of you who have experienced auditing have come across that situation where it is not clear, not even within the organization, who is top management. And there is no recipe that works 100%, but there is just one little hint that I can give you that usually works. And it's simple. Money talks. Usually top management are those people that provide the money, that provide the resources. And I'm not talking about the accounts payable clerk who prepares the check, but I'm talking about who authorizes the payments. So that's always a good starting point to figure out who is management. There is also additional guidance on the competence of individuals managing the audit program. That person or that group of persons who manage the audit program play an important role, in particular in larger or more complex organizations. They are required to have knowledge of information regarding the auditee and its context, meaning the auditee's external and internal issues, relevant interested parties and their needs and expectations, business activities, products, services, and processes. They also need to be aware of the risks and opportunities related to the audit program. Now, this becomes really important when selecting the audit team and the overall competence requirements, but also when determining the context and the extent of the audit and the objective, scope, duration, and method for each individual audit. There was already some guidance, and that's the last bullet point on this slide here regarding the competence of those individuals managing the audit program. And there's a lot. And from what I have observed, the role of the person or persons managing the audit program is in many cases understated and reduced to scheduling audits. There might be a lost opportunity for a much more effective and efficient and adding audit program if more attention is paid to the competence of those individuals. A lot of guidance is provided in section 5, and as you will see. In section 6, conducting an audit, the principle of risk-based approach to auditing is interwoven into this section, and it becomes apparent every step of the way that the auditor's risks play an important role in an audit. The audit team leader should adopt a risk-based approach to planning an individual audit based on the information in the audit program and the documented information provided by the auditee. Remember the new audit principle. Risk-based approach means an audit approach that considers risks and opportunities. That means the focus should be given on matters that are significant for the audit client and for achieving the audit program objectives. For example, processes with higher risks should receive more attention than those with lower risks, and resources should be assigned appropriately. However, this does not mean that those processes with lower risk should be neglected. At the same token, I really hope that this is the end of these style audit plans in which every single process within the management system gets the same amount of audit time assigned. This is no longer acceptable or should not be acceptable. During the audit planning stage, when establishing contact with the auditee, the audit team leader should also request information on the risks and opportunities the organization has identified and how they are addressed. It is apparent that the audit team leader should have knowledge of the auditee's context to be able to evaluate this information and to come to conclusion on its appropriateness. So audit team leaders, I think you have a lot more work to do. The next topic that underwent a lot of discussion is audit information availability and audit. Remote auditing, while still not allowed in some industries, has become a necessity in others. For example, for an organization with no physical location, this could be an online-only business, for example. There is no other way but to audit remotely. And this triggered a new definition for audit location. Audit location is where information needed for the specific audit activity is available to the audit team. This may include physical and virtual location. For example, when records are stored in a virtual cloud, that would be considered the audit location. Audit methods, on-site physical, at the physical site auditing versus virtual auditing, for example, or using communication information technology tools. These audit methods should be based on where, when, and how information can be accessed. Extensive guidance is provided in Annex A. And of course, the audit methods also depend on the defined audit objective, scope, and criteria, the audit duration, and the location. In some cases, there may be remote locations that are just not accessible for the audit team, or it would be extremely complicated or not practical to go there. Then it is acceptable to use different methods as long as this is accepted within the audit program. In section 7, competence and evaluation of auditors, well, it has become apparent that with all these changes, auditors require an additional set of knowledge and skills in order to perform audits effectively. Additional competence is related to understanding the types of risks and opportunities associated with auditing and the principle of the risk-based approach to auditing. And additional competence also related to the organization and its context, knowledge and skills in this area enable the auditor to actually understand the auditee structure, the auditee's purpose, and its management practices. Now, in red letters, you'll see here something that somehow has always been implicit, but this time it was really spelled out there. An auditor should be able to audit a process from start to finish, including the interrelations with other processes and different functions where appropriate. Yoo-hoo! Finally, this is spelled out there. I believe that most auditors got it, and I hope this is the end of that element-based approach. Generic competence of audit team leader. There has also been a significant change, or addition rather. The audit team leader should be able to discuss strategic issues with top management of the auditee to determine whether they have considered these issues when evaluating the risks and opportunities. The audit team leader should also be able to recognize who is top management. Remember, usually money talks. Now, it will be interesting to see how this new requirement will be translated into specific competency criteria which can be evaluated, because this is not just about knowledge of business practices, but it also has to do with personal attributes and skills, being able to sit down with management and discuss their strategic issues. There have not been any significant changes to the processes for evaluation and maintenance of auditor competence, well, except for the inclusion of those new requirements stated here. And overall, as always, the overall competence of the audit team needs to be sufficient to achieve the audit objectives. There has been some changes to the annexes. The previous Annex A guidance and illustrative examples of discipline-specific knowledge and skills of auditors has been removed. There was a really long discussion about this, and the conclusion was that due to the large number of management system standards, it would really be quite impossible or not practical at all to include competence requirements for all disciplines. And what was Annex B now is Annex A. Some of the text has remained pretty much the same. And now there's a lot more new text to provide additional, very useful guidance to topics relevant to providing effective and efficient audits. Now, how do these changes affect the user? There are several users of this ISO 19011 document. Let's start with the audit client. Well, the audit client should be the one benefiting the most after all these changes have been implemented. If done well, the audit output should provide valuable information on the auditee's management system and findings that are relevant to the audit client. This is very important. Now, this puts also some responsibility on the audit client regarding the audit program. They should really insist to get the best out of those audit programs and to effectively use the resources that are being assigned to it. Now, the auditee. How do these changes affect the auditee? Expect the audit programs and individual audits to become more efficient. Expect that focus be placed on matters that are significant. Expect an audit report that provides valuable information on the management system, its gaps and opportunities based on the business needs and expectations. Expect a report that outlines if your management system is achieving its objectives or if it is on the right route to doing so. You should also expect a more efficient use of resources by assigning priorities according to, and here it comes again, matters with higher risk and lower performance levels. The use of information and communication technology as appropriate, and also a more efficient audit process as a result of the combination or integration of audits to address one or more management system standards at once. Now, how do these changes affect the audit team leader? More emphasis should be placed on preparing for the audit. There's more information to consider for an audit to be effective. The audit team leader needs to adopt a risk-based approach when planning the audit and needs to understand the auditee's organizational context, the internal external issues, the strategic direction, and the applicable requirements and inherent risks. When planning the audit, resources should be assigned considering, here we go again, matters that are more significant, and also in such a way to ensure that the audit activities are effective and efficient. Consideration should also be given on outsourced processes. It is not always obvious what constitutes top management and where decisions are made. There's also additional requirements regarding lead auditor competency as discussed earlier. The audit team leader should be able to discuss strategic issues with top management of the auditee. With all this, it becomes apparent that the role and competency of the audit team leader has become even more important. And it is very critical that the audit team leader be familiar with the auditee organization and its context when planning and performing the audit. How do the changes affect the auditor? There's a few more things that the auditor needs to know or do before going into an audit. The auditor needs to be knowledgeable of the auditee's context and understand the types of risks and opportunities associated with auditing and with the auditee's management system. And the auditor should be able to audit a process from start to finish and evaluate the effectiveness of the management system in meeting its objectives. Now, how do these changes affect the person managing the audit program? As we said before, that person has an important role. The new ISO 19011 provides plenty of guidance on how to establish effective audit programs and the inclusion of considerations of risks and opportunity. The person managing the audit program should know how to allocate resources and the methods to make this process effective, to make the audit program effective and efficient, and really aligned to the audit client's strategic objectives. As with the audit team leader also, and the auditors, also the person managing the audit program should understand the auditee organization and its context, at least to a certain extent. Now, how can we enhance the value of an audit? By definition, adding value means making something more useful. Audit should be useful in helping an organization to achieve their strategic objectives. That's why they're audits, and they're becoming more and more important. And there's more and more management systems being published, management system standards, excuse me. And in some industries, there is really a lack of very good auditors. And by good auditors, I do mean those who are able to add value through their auditing. And I'm not talking about consultancy, because there's a big difference. How can you add value? By providing information to top management regarding the status of its management system and or its individual processes, by identifying problems that, if resolved, will enhance the organization's ability to meet their strategic objectives, and by identifying possible areas of risk and improvement opportunities. And of course, there's more ways to add value, but please keep in mind that that's the overall goal that also enhances the profession of the auditor, which is becoming more and more important. How do we not add value? Mostly when we apply the element-based approach. When doing so, the auditor focuses on how each clause of the standard is met and may not see the overall effectiveness of the management system. Then, when this happens, the audit just becomes a burden to the organization. What now? What should you do? How should you address all these changes within your audit program? First of all, review your audit program and adjust it to the new guidelines provided by ISO 19011-2018. Review and, most importantly, rethink your audit procedures, including templates, in particular checklist. By rethink, I mean zoom out, look at the big picture, think what you want to achieve, What does your organization want to achieve? What are its strategic objectives? And then adapt your audit program and your audit procedures so that your audits will really add value to your organization. Review the competence of your audit team. Provide training as needed and fill other gaps related to competence. Remember, you may use technical experts if required. You may use interpreters. All of this, there's really not much new to those aspects. Implement your revised audit program and procedures. Review if it is effective in achieving the desired results. And adjust your audit program as necessary. Simple, right? Conclusions. The new ISO 19011 provides enhanced guidance to focus on matters that are relevant to the audit client and make audit programs and individual audits more effective and efficient through an audit approach based on the auditee's context, strategic direction, and inherent risks. Implications. There are enhanced competency requirements for persons involved in audits. And, well, everybody should be knowledgeable of those factors just mentioned before: the context, strategic direction, and inherent risks of the auditee organization. Responsibilities. All involved share the responsibility to ensure that audit programs and individual audits are effective in delivering the desired results. And by all, I do mean all. I mean the audit client, I mean the auditee organization, I mean the person planning audits and establishing the audit program, I mean the audit team leaders, and I mean all members of the audit team. Everybody has a responsibility here to make this ISO 19011 guidance document really useful, and to make sure that management systems are adequately implemented and adequately improved over time. This is a big responsibility and everybody has to participate. This is it. Thank you very much for your attention, and well, I hope to talk to you next time.
Thanks, Elisabeth. This ends today's presentation. Thanks for listening.